Good morning and welcome to Market Monday for October 27, 2025. This just in, the CNN Fear and Greed Index hits extreme fear as the S&P 500 stock market is bouncing around all-time highs. We've been talking about the increased bearish sentiment that's crept back in recently, and remember this?
Here's each of the past 4 weeks, so you can see the trend even starting to get more bullish and less bearish.
We've also been talking about this K-shaped economy, or tale of two economies, where one segment, namely high income earners and those with assets, are doing well, and the rest of us not so well, or even struggling. And they might be onto something. Here are hiring conditions, both currently in white and over the next year, with the caveat that companies surveyed here had operations in Midwest states like Illinois, Iowa, Indiana, Michigan, and Wisconsin. Nevertheless, look at hiring expectations over the next year, the lowest since the COVID pandemic. And right on cue, we see the number of people who registered to take the LSAT, the exam to enter law school. Last year was just under 19,000. And then this year it was over 32,000, an increase of 70%. What do they say? If you can't find a job, keep getting more degrees. Of course, this tight labor market signaling to the Fed that it's time to cut rates another 25 basis points at their meeting this Wednesday. The market showing all but certainty of that one cut. And looking ahead to the Fed's final meeting of the year in December on the 10th, it appears, at least for now, there's going to be one final 25 basis point cut coming overnight down to around 3.6%. And speaking of rates, the Fed and the Fed's balance sheet, we probably haven't looked at this chart in years, but it shows the size of the Fed's balance sheet going all the way back to 2009 when the stock market bottomed. The narrative at the time was that the market was only growing due to the Fed's balance sheet expanding, and it tracked fairly well up until a few years ago. But then we see the Fed's balance sheet now down about $2.5 trillion since the peak of around $9 trillion. And we all know what the S&P 500 stock market kept doing. Why? Earnings. Here are earnings for the S&P 500 stock market going back to 2012. So not quite the same time frame, but close enough. Earnings have steadily increased just about each and every year, like clockwork. So it appears this is the more likely reason for the rise in the stock market over the past 10 or 15 years. And today, we'll leave you with this: the age of chaos. That's President Trump in the background there, causing all this chaos. This is from late April of this year, so 6 months ago. And it has been one of the best and least volatile 6-month periods in markets ever. So whatever your politics are, we always want to disconnect that from your portfolio. Have a great week.